Hi, I'm James, and in this video, we're going to talk about quantitative easing and what that does to our purchasing power, and also why it's actually a great tailwind for what are called hard assets. So to put it simply, quantitative easing is just a way for central banks in countries around the world to stimulate their economies, or at least that's the theory anyway. So how they do this is they do it in a number of ways, such as like buying bonds and buying bonds from banks, and they do all sorts of things. So without complicating it too much, essentially what happens is central banks sort of print money into existence in order to stimulate economic activity. Now, I would recommend doing a bit of Google searching on quantitative easing and just having a little bit look further into like the actual definition and some of those examples of how central banks actually do quantitative easing, just to give you a better idea. But keeping that aside, if you want to go down the rabbit hole, please feel free. But I want to keep this quite high level and kind of discuss this, conceptually rather than in the details too much. So now that's out of the way, essentially the result of quantitative easing means that there ends up being more cash and more dollars, say, in this case, in the economy after quantitative easing than there was before. So essentially what that means is like new dollars are created almost out of thin air. And so the main effect that that has is it actually dilutes the value of the dollars that already existed in that economy. And this can be a little bit tricky to get your head around. But the most practical way to relate to this concept is through inflation. And I've described this in a few videos before, but inflation causes our purchasing power of the dollars that we have to go down over time. So you'll have noticed, I'm sure, that the same $10 that you would have bought a lot with 10 years ago will buy you much less today. And essentially that's the effect of increasing the amount of the money supply, increasing the amount of dollars in circulation, is that it devalues the dollars that already exist. Okay, so that's just a way for us to understand the implications of quantitative easing. So why is that a good thing for what are called hard assets? Now, for the sake of this video, I'm just going to talk about a few things like gold, silver, and more recently, something that I consider to be a hard asset, and it's a little bit controversial, but that is actually Bitcoin. So when quantitative easing happens and more dollars are created into existence, that actually makes a dollar less scarce. It becomes less rare, and as a result, its value is reduced or diluted. Now, the same is true like in reverse for hard assets. So for example, gold is quite a scarce hard asset in that it becomes increasingly rare with respect to something like dollars, which become increasingly more common as they're printed into existence. And essentially what that means is those hard assets relative to those dollars become worth a lot more over time. Now, why I like Bitcoin so much at the moment is because not only is it an asset that has a limited supply, but it actually gets rarer over time, which means if it becomes an asset class into the future that people adopt as a store of value or for any other reason, then its increased scarcity means it becomes rarer over time with respect to the dollars that are becoming more and more common and therefore less and less value. So in other words, the price of something like Bitcoin can grow quite dramatically over time, especially when we have what I would consider to be extreme money printing. Now, the reason why governments are doing this at the moment around the world is because their economies are effectively shut down. And we all know why that is. And a lot of countries are actually in lockdown. And so, the people running those countries, they don't necessarily want to see complete destruction and chaos. And so, the central banks in those countries and the governments opt to print a lot more money into existence in the hopes that that will stimulate the economy enough to survive through this, hibernation lockdown period. But at the same time, what that actually results in is it actually inflates and increases the value of hard assets, because investors will look to store their wealth and preserve their wealth in these assets that are much more scarce than dollars, which become worth less over time. Now, I personally am invested in both gold, silver, and Bitcoin, but I'm most bullish, or I'm most confident on Bitcoin as an investment. I don't know what's going to happen with it in the future. I personally am very confident that it's going to increase in value substantially. However, it could all go to zero. And so, it's really important that as investors, we manage our risk well, and we consider, rather than putting all of our eggs in one basket, as I've spoken about before, well, we can allocate some of our portfolio to different types of investments. So for example, my overall, investment portfolio, I've got like an equities portfolio, I call it, and a crypto portfolio. Of that entire value of all of that, about 10 to 15% is in gold and silver for me personally. And then about maybe 10%, and I'm increasing this, about 10% of that is actually in Bitcoin. And I'm becoming much more aggressive on Bitcoin the more I learn about it. Now, I think there are a number of huge tailwind factors that are big, that are catalysts for the increase in price and the adoption of Bitcoin into the future. So for example, PayPal have just announced officially that they are looking to develop cryptocurrencies themselves, and they're looking to facilitate people to purchase cryptocurrency through their platform. Now, PayPal has like 300 million users or something globally. So, that's a lot more people giving them access to the world of cryptocurrency. Now, that, among with so many other things, which I won't go into, are real positives for the opportunity for investing in something like Bitcoin now, before a lot more people come to adopt it and look to invest in it as well. So there's something called an adoption curve. And an adoption curve basically describes the diffusion of innovation, which I've shown in another video, but I'll show it up here now. And it basically just shows, over time, when a new technology or something comes into existence, it takes time for it to reach, the most number of people who are adopting the technology. So if we want to invest in gold, as I personally am, that is quite mature along this diffusion of innovation, along the adoption curve. Silver is also quite mature in the adoption curve, whereas something like Bitcoin is quite immature across the adoption curve. So that means as that adoption curve increases, the demand for it will increase as more people want to purchase it, to invest in it, to hold it, to preserve their value with the backdrop of quantitative easing, banks printing infinite money like in the US. That will have massive increase in demand for that particular thing, which in this case is Bitcoin, which will drive the price up. Now, the reason why that will drive the price up so dramatically for something like Bitcoin is you can't just create new Bitcoin. It has a fixed maximum supply of 21 million. And essentially 18 million of that 21 million currently exist, and the remainder 3 million will be mined over the next 100 years. But the rate at which new Bitcoins are mined is actually reduced every 4 years, which means it becomes rarer and rarer over time. At the same time, central banks, we know, are printing more and more dollars over time. So if we purely just look at that objectively, if this is an asset class that is adopted as per the diffusion of innovations, if it increases along the adoption curve, if central banks keep printing money globally, which we are seeing them do, and more people are demanding this as an asset class to store their value and to preserve their wealth, that only bodes very positive for people who have invested in that asset class early. And in my opinion, if you're investing in it now, you still have plenty of upside, as I personally am. I think there is still a lot of time ahead. It's only been around for 11 or 12 years, Bitcoin. However, it's made ridiculous gains in that time, but in my opinion, it is nowhere near its maximum potential. The total market capitalization of gold, for example, is around 11 trillion US dollars, which means the total amount of gold there is times the price that people pay for gold equals 11 trillion US dollars. The total market capitalization of Bitcoin currently is around 200 billion US dollars, which is like a tenth. Sorry, it's less than a tenth. It's much less than a tenth. It's like a 50th. And so, if we expect that Bitcoin even reaches 10% of the use case of gold in the next, 5-10 years, say, or even sooner potentially, that would give Bitcoin a valuation of 5 to 10 times its current price right now. So if we purely look at quantitative easing and what it does to hard assets like gold, silver, and now I'm saying Bitcoin, then that is a large amount of forces that are pushing the value or the price of these types of assets up into the future. And it's why I personally am becoming very aggressive investing in that space right now, when I'm not overly comfortable with some of the valuations of stocks that we're seeing in the market at the moment. You're seeing like Tesla up over $1,000 a share in US and all this kind of stuff. I think the stock market is pretty crazy at the moment because of all the Fed, all the central bank money stimulus. And so I'm looking to alternate asset classes that, in my opinion, are a little lower risk from the bubble popping, which is pretty ironic considering I'm saying that I'm investing in cryptocurrency. Okay, that's all from me today. The main conclusion here is that quantitative easing and money printing, it pushes up the value and demand for scarce and hard assets. So this could be an opportunity for you and I to look at investing some of our portfolio into hard assets like Bitcoin and like gold and silver, as I personally am. Okay, that's it from me. Thank you very much for watching. And if you're new to the crypto space and you're looking to get involved, there's a couple of exchanges that I personally use to buy my crypto. They're really easy to use, very user-friendly, and I personally recommend them. So I'll leave a couple of links down below. And yeah, if you want to set up an account and you'd like to get started on that journey, I'm happy to make more videos on this stuff. I've actually created a crypto-only YouTube channel as well to talk about crypto, because I didn't really want to alienate the audience here in case you're not interested in that. But if you are, check out the crypto channel. I'll leave a link up here somewhere. And if you want to set up an account to start purchasing some yourself, then I'll leave a link down below. So thank you very much, and I'll speak to you soon. Cheers.